Welcome to XM.com. This is a Forex Preview. We'll be having a closer look at CPI numbers coming out on Wednesday, followed, of course, by the Fed minutes of the September meeting. I'm Christina Marujos, and joining me today is lead investment analyst Rafi Boyadjian. Rafi, Friday's NFP report was quite disappointing, but it looks like it didn't phase markets regarding expectations for Fed tapering. Wednesday now holds the CPI numbers for September, followed by the Fed minutes of the September meeting. What are we likely to see in the numbers, and do you think this will likely seal the deal regarding a November taper move?
So, Christina, there was a lot of focus on the September NFP numbers because the Fed had said it wanted to see a reasonably good report to get the green light to begin tapering in November. Now, I'm not sure if we got a reasonably good report, as the headline number was way below expectations. However, there were some seasonal factors dragging the headline figure low, and looking at the details, overall, I think there were enough positives to reassure the Fed that it is safe to start tapering soon. Based on that, I don't think Wednesday's CPI numbers, as well as the FOMC minutes, will change a great deal when it comes to what to expect from the Fed in November. Nevertheless, given that the last two job reports were somewhat on the soft side, if the CPI data also disappoints, we're more likely to see a dovish taper announcement than a hawkish one. And there is a slight risk for that because there is some evidence that inflation in the US may have started to peak. The annual rate of CPI is slightly to 5.3% in August, and it's expected to have stayed there in September. And as for the minutes, it will be interesting to see what the discussions were around the taper timeline, but on the whole, they probably won't reveal much more than what we already know.
Now, the dollar has been having an impressive run, gaining mainly on its safe haven status. How could the greenback perform this week on the CPI data?
So September was a strong month for the dollar, though the rally cooled a bit as we entered October. We probably would have seen a bigger pullback as risk appetite improved somewhat had it not been for the relentless rise in treasury yields. And that's what poses the biggest risk to the dollar heading into the upcoming data and the minutes, because treasury yields have skyrocketed since late September, and any negative surprises in the CPI data might trigger a correction in bonds, pulling yields lower. And of course, this would also weigh on the greenback.
Rafi, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.